about that in detail when we talk about your monetary tipping point thesis here. I want to ask you whether or not cryptocurrencies have played any role in gold's underperformance this year.
Well, we are very open to cryptos. We in fact manage two funds that combine gold and gold mining stocks with Bitcoin and other cryptocurrencies. So from my point of view, they're not really a competitor or an enemy of gold. I see it as complementary. So I think from a portfolio point of view, it makes sense to combine both. I think, of course, gold for the media, for example, I think Bitcoin stole a bit of media attention from gold because there was so much going on, new all-time highs, lots of volatility, and of course it is something that is discussed in a very controversial way. Yeah. You either love Bitcoin or you hate it. There's really nothing in between. So yes, perhaps when it comes to the media, but I think when it comes to flows, I don't really see it because I think at the moment, if you analyze the buyers of gold and also of crypto, I think there's not too much overlap. Okay. I think what's really missing for gold at the moment is investors' demand. And if you have a look, for example, at ETF flows, they are very pro-cyclical. So every time gold rises, there's money flowing into these ETFs. Every time gold falls, money is flowing out of those ETFs. And I think that as soon as gold will pick up momentum, I think investment demand will kick in again. And I think this will be the major driver for gold going forward.
These two asset classes, cryptocurrencies and gold, do they have any overlap in terms of the type of investors? Just in your funds, for example, do people buy both your precious metals funds and your crypto funds? Or are they different groups of investors?
But I think we are one of the very, very few companies that actually combine both. Okay. My partner Mark and I, we started thinking and also investing in Bitcoin in 2012. I think it's a extremely interesting scene. I've met brilliant people in this industry. I think, it is something completely new. So there's so many different aspects to analyze. For example, what's going on in El Salvador at the moment. Yes. Yeah? That's a very, very big monetary experiment. Yeah? I don't know how it's going to turn out, but I think it's extremely fascinating to follow. Right. So from my point of view, there are many similarities. I think the stock to flow ratio, so this natural inflation of gold and of Bitcoin is very similar. I think both are hedges against, all those big monetary experiments that are going on. They're hedges against fiat money. They are there to preserve your purchasing power. And therefore, I think both fit into your portfolio. But as I've said, we're one of the very few asset management companies that actually combine both.
So you don't think Bitcoin competes with gold as a store of value?
Not yet, perhaps at some point. And when you compare market caps, gold is at 10 trillion at the moment, Bitcoin at 8 or 900 billion. So it's still tiny compared to gold. Of course, it's catching up. But I think what we're now really seeing is this mass adoption coming from big institutional players. So it used to be back in the days, mostly tech savvy, younger people, very much of retail driven. And now is really the stage when institutional players are coming in. And obviously this is going to be the main driver going forwards in the crypto space. Yeah. So, yeah.
One more question on crypto, and we'll go back to the markets. I've talked to some crypto investors and analysts, and people talk about the flippening of gold. So like you said, Bitcoin is only a very small percentage of the gold market cap. We're talking about $9–10 trillion, depending on what the market price is. And Bitcoin is less than $1 trillion, depending on what the price is. So one day, they say, it will flip gold. Do you agree?
I don't think so. I think it will catch up. My long-term price target for gold is $4,800. So there's, I think that the market cap of gold will continue to rise.
But you don't think Bitcoin will grow at least 9 times?
I think if Bitcoin will be around in 5 to 10 years, I think, prices will go to regions that we cannot imagine at the moment. Absolutely. Because if you really see it as a hedge against inflation, against those big monetary experiments going on. And if you compare it, I don't know, to the size of the real estate market, to the bond market, yeah, at the moment there's 19 trillion invested in negative yielding debt. So I think there's lots of catch-up potential. But I made the comparison once. It is like, you know, having in your garage a big Volvo SUV, very comfortable, and a Ducati Panigale, so a really, really fast motorcycle. And you can go from A to B with both.
Yes.
It's going to be probably more fun on the motorcycle, but it's also more risky.
Yes.
So, and as soon as it starts raining or snowing, it's going to get really risky. So, you know, you just have to choose if you can stand the volatility of Bitcoin.
Does Bitcoin protect against rain and snow, so to speak? Does it have the same hedging functions as gold when it comes to recessions, falling equity prices, and so on?
Well, of course, I mean, the time frame to analyze that is not very long, but we saw last year during the COVID crisis that that Bitcoin got hammered. Yes. So I think it does have some sort of a risk on function, so it works best in a risk-on environment, but that doesn't necessarily have to mean that it's going to be always like that. So perhaps in the next market crash, people will turn to Bitcoin. Yeah. Yes. So I could definitely mention that.
Interesting. Let's talk about the monetary tipping point. In your presentation, you opened with a slide of a picture of, or a video clip of a warehouse, and there was a lift fork, and he had an accident, and the entire warehouse collapsed onto the lift fork. And you made that analogy comparing it to today's financial conditions. So why are we at a tipping point, and what exactly is this tipping point?
Well, the tipping point, it goes back to this fantastic book by Malcolm Gladwell. And I made the analogy because I think basically since the end of the Great Moderation, and I would say that the Great Moderation, so basically those decades when inflation was under control, where we saw very steady growth, I think that the times of the Great Moderation are over. And since the great financial crisis, 2008, 2009, central bankers are really desperate trying to reach higher inflation numbers. So basically, since 2008, they keep telling us inflation rates are too low. We have to print more. We have to do more quantitative easing. We have to lower rates for longer to get inflation rates up. Now, I think the COVID crisis was really the tipping point because we saw very, very high monetary growth. M2 was up 25%. And by the way, gold was up 25% last year as well.
Coincidence?
I don't know. Yeah, I don't think so. But now we're also seeing very aggressive fiscal stimulus. And I think this combination that really led us to this tipping point. And you know, we're seeing it, of course, you know, listening to central bankers. They keep telling us that inflation is transitory. They say, well, it's going to come down significantly. From my point of view, it's not transitory because of lots of new policies, mostly fiscal policies, that are now being introduced additionally to central bank policy. And I made the case, I said, perhaps the big days of central banking are over.
Yeah.